Wine, a very special drink that has the magic ability to turn ordinary moments into special moments. A drink where you can feel the flavor, the vineyards behind it, the craftsmanship, and the time. Now, if you don't know anything about wine and wine investing, this video is going to take you from the beginning, from you assuming you don't know anything, and take you all the way to make you an expert in wine investing. So you also can find the hidden gems that can make you very wealthy. Now, let's take the first and most obvious question. What is wine investing? So wine investing is very obviously and sadly not to get drunk. Wine investing is that you buy wine, you let time do its thing, you let the wine mature, and then you sell it later. You sell it 20 years later. So wine is not about buying fancy wines and using them at the barbecue or at dinner. Wine investing is you buying the fancy wine, waiting at 20 years, and then selling the wine to the person using the wine at the barbecue at the dinner. The first thing you will discover when you come into the wine world and into wine investing is that wine can be divided into three categories. And in a lot of ways, wine investing is very similar to stock investing. So you divide them into wines that comes from Bordeaux, wine that comes from Burgundy, and wines that are rebels. So the wine that comes from Bordeaux, they're like blue chip stocks, they're like large, big, stable companies, and their value is very consistent. Burgundy is like the fast growth company, they have a lot of potentials, and the rebels are like startups, they have very big potential, they're very volatile. And right now we're going to start this video by looking very detailed at each one of these three categories, so you have a very good overview of each of these sectors. So everyone from the billionaire to the newcomer that are storing their wine under their bed, they all have to learn these three categories of wine. Now let's start with the first category of wine, which is Bordeaux wine. Now Bordeaux wine, as said, is like a blue chip stock. They're widely recognized, they're very stable, and this is where the concept of wine as investing even started. So 60% of the wine market consists of Bordeaux wine, and when someone is talking about fine wine, they're usually talking about Bordeaux. So the history started actually in 1850 when Napoleon III decided to show off France. So he asked all the merchants to show off their best wine, and that's when the classification of wine started. And the best of the best, the creme de la creme, is the first growths. So these vineyards and these wines are the most recognizable one. And as said, they consistently have between 6 and 12% annual growth each year, making them a favorite for a lot of investors. And these can continue to grow for 30 to 50 years. So these wines are usually in your grandfather's portfolio. They are perfect if you're patient and wait. Now, when that is said, they are subject to demands from the Asian market and from the Asian market, which gives booms and also lows, and some of the wines could be sleepers, meaning they could have a very low growth rate until they suddenly explode. The Bordeaux is the most traditionally fined. They are even very liquid, being traded on the London wine market, so you could sell and buy them quite easily. And this is where most wine investors usually start, with a Bordeaux. The second category of wine is Burgundy wine. Burgundy wine can be characterized as an artist, like a Picasso. They're very colorful, very emotional. But okay, what is Burgundy wine? So Burgundy wine usually comes from either Pinot Noir, which is red wine, or Chardonnay, which is white wine. But it's not the type of grape that determines if it's a Burgundy or not. It's the terroir, which is a fancy French word that means the soul of the land, or the soil, in other words. Now, Burgundy wine usually comes from tiny plots of land, and these tiny plots of land have been documented to have different character, different taste, and the French have documented this very well. And while a Bordeaux estate might produce 20,000 bottles of wine or more, a Burgundy estate usually only have around 400 bottles, or even less. So the supply is very small, making it perfect for investors. Investors love it because the supply is small, but it could also lead to some very high prices. Like the most expensive Burgundy wine can have prices above $100,000, with demand from Europe, North America, Asia, from everywhere. So if you buy the right type of Burgundy, you can make a fortune. But it's worth noting that there's a lot of fake Burgundy wine around, a lot of counterfeits. Like Burgundy wine is counterfeited more than even Gucci bags, so you have to be careful. But if you buy early and you buy the right type of Burgundy wine, you could make fortunes with it. They have a very high growth potential. And finally, you have the last category of wines, which are the rebels. The rebels can be compared with startups in the stock market world. They're outsiders, they're not part of the French establishment, and the wine can be from everywhere. It doesn't have to be from France, from Burgundy, or from Bordeaux. So this can be, as an example, it could be Napa Valley wine from America, it could be South African Stellenbosch wine, it could be Australian wine, it could be New Zealand wine, it could be Chilean and Argentinian wine, it could be Spanish Rioja wine, it could be Italian Tuscany wine. So to take some of the most famous examples, the Napa Valley wines, they're competing with the Bordeaux wines right now in the first growth. And some of the reason behind this is that in recent years, a lot of American wine investors come to the market, and they're like their home market, right? The Italian Tuscany wine is becoming more and more popular because it combines heritage with relatively cheap prices, and it's starting to become a favorite. Another example can be wine from Champagne region in France, and they're fizzly, which is a plus for a lot of people. So these wines are underpriced, you can say, right now, but as the wine investor and the wine collector world is becoming more international, more diversified, these wines are becoming more and more popular. So they have a huge potential. But these ones, just as in the stock market with startups, the prices can go up and down, up and down. So they are volatile. They're not as stable as a Bordeaux wine when it comes to prices. Just as with stocks, diversification is very important when it comes to wine. So just as in stocks, you usually have portfolios, and a typical portfolio consists of around 50% Bordeaux wine, around 30% Burgundy wine, and around 20% of Rebels type wine. And this gives, the Bordeaux gives stability, the Burgundy gives scarcity, and the Rebels give growth potential. And the very cool thing is that when it comes to the wild world, unlike with stocks, the prices of the different categories are they're not dependent on each other. So when Bordeaux is doing well, it doesn't have to mean that Burgundy have to do well, which is even better when it comes to diversification. So if you're going to be a wine investor, don't forget diversification. Don't put all your money into one place, but make sure it's spread out. You might start to get ready to start investing in wine, but you're wondering, what really determines the price of a wine? How can I know that this is a good wine to invest in and this is a bad wine? Is this just random? But no, this is the beautiful part of it. Choosing wine is actually really mathematical. There's 6 factors that determines the price of a wine, and you can go through them, analyze wines dependent on these factors, and in that way choose wine. And these factors are: 1, provenance, which is who has owned this wine and how has it been stored. 2nd, if it's vintage, because weather conditions has a lot to say. Number 3 is the terroir, meaning where it comes from, what type of soil it comes from, what specific part of the country it comes from. Number 4 is the storage condition. Number 5 is how critics have scored the wine. And of course, number 6 is how global demand is for the wine. How is the demand from Asia for this wine, for example. Now we're going to go through each one of these factors one by one, and this is maybe going to be the most important part of the video, because this is going to teach you how to choose wine. And I will greatly advise you to, if you're going to invest, create an Excel spreadsheet and go through each of these factors. Maybe in a later video we could do that together. So let's start with factor number 1, one of the most important factors, which is if the vintage of the wine. Now you're probably wondering, what does vintage mean? I didn't even know what vintage mean. For a long time I had to always look it up, but vintage means the year it's produced. But it's not just the year, it's the climate of that year. So sometimes, let's say a wine from 1980 is worth a lot more than from 1981, and the question is why? And the reason is because some years, which are called good vintages, they have the perfect acidity, the perfect tanning, and the perfect balance between sugar, and it's the climate that determines that. So disastrous years, there's like snowstorms that destroys crop, and most vintages are okay, but they're not standing out because of their specialty. So the climate of that specific year has a lot to say, and that's what we call vintage. So that's factor number one. Let's dive a little bit more into factor number two, which is the terroir, which is that fancy word for soil, right? And that means the land. What kind of soil is it? What kind of acidity is it? Where is it placed? And often more expensive wine detail more what part of the country, what part of the specific area they come from, because they're proud of that terroir, right? And very good wine producers, wine estates, they have terroir that produces the same quality of wine year after year after year. And that's like a mark of quality. Factor number three, I said, was producer reputation. And of course, in the world of wine, the estate that made the wine has a lot to say, because some estates have like a very deep history and they're known for being quality. Their name alone can double the value of a wine. So let's take for example Chateau Lafite Rothschild. The name alone of that estate can many double the value of the wine, and it's just because of their reputation alone. When you're investing in wine, always check the reputation of the vineyard too. Now, factor number four was the score of critics. So just with stocks, if a celebrity tweets about the stock can explode up and down. And in the world of wine, it's exactly the same. A good score from a critic can many double the value overnight, and a bad score from a critic can tank it sadly. Now, one very famous critic is Robert Parker and his 100-point systems. So the difference between a wine that gets 95 points and wine that gets 100 points can be double the value overnight. So wine investors, they very closely monitor these scores, and if you're going to be a professional wine investor, you too have to check the score of critics when it comes to different kinds of wines. Now, the next point when it comes to wine investing, the next factor that can determine the price is of course global demand. Wine, as you probably know, is a commodity, and the price is determined by demand and supply. And if it's scarce, it becomes more valuable. Now, the good thing with wine investing is that it is actually limited supply. With stocks, they cannot just issue more stocks. The amount of bottles is finite. And as you know, for Burgundy wine and for Napa Valley wine, there is just a certain amount of bottle that comes out each year. Demand can just double many times if there is a rumor going around that it's scarce, that the amount of bottles this year is very scarce. And since the 2000s, a trend has emerged where people from Asia has increasingly joined the wine investing community. So people from China, from Singapore, from Hong Kong, from Japan, and this has pushed the global demand up. The next and final thing you should think about is provenance. Now, provenance is another fancy word, but it basically means history plus ownership. And this is the reason you don't just buy wine from eBay. You want to buy it from someone professional that had it stored in the correct temperature and that has the documentation. Without the correct documentation, a very valuable wine could become basically worthless because you don't know if it's a counterfeit. A very famous example is the story of Rudy Kuriniavan that made plenty of fake Bordeaux and Burgundy bottles and sold it. So you have to always make sure that you have the proper documentation that shows the ownership and storage conditions. Now, all these factors that we have gone through, I would very recommend you to put them in an Excel spreadsheet or note them down. So when you're ready for investing, you go through each one of them carefully and think, is this going to be a good wine or not? But let's say that you're now thinking about investing in wine. You're ready to invest in wine. The question is, how do you invest in wine? Because most people don't have like a ground cellar with tons and tons of wine. Now, the first thing you have to think about when you're going to actually invest in wine is, how are you going to do it? What kind of investor are you? So you have to choose your style, and there's two styles to choose between. One is that you buy the wine physically yourself and you store it yourself. Now, a small wine storage doesn't cost that much, and you get a kind of satisfaction from having the wine in itself on your own. Now, the bad things about this method is that it's very labor intensive. It costs a lot because you have to buy the wine storage, and you're always like one heat wave away from losing all your wine. And let's be real, the people that invest in wine are a bit over average interested in wine. So the chance of one of the bottles getting opened is also a big risk. Now, the second version you can invest in wine is through apps. Now, today there's an app for absolutely everything, and you can invest in wine through apps. You can either invest through join a fund where you get a fractional ownership of a lot of different type of wines, or you can go into the wine apps and choose your own wine. And the good part here is that they take care of insurance, storage, everything, and you also don't need to buy a whole bottle. You can invest with a small amount of money and buy a fraction of a bottle. So again, you have to decide, do you want to own the wine physically or do you want to invest through apps? Now, one very, very important thing to remember with wine investing is that it is a long-term investment. So you have to at least count for between 15 to 30 years of investment. It's not trading, it's not you selling but it's not you buying and selling overnight. You have to buy and hold decades, 15 to 30 years at least. And if you're going to buy your own wine, you also have to think a lot about storage. Temperature has to be between 12 and 14 degrees. Humidity has to be between 65 and 70%. You also have to think about UV and that there's no vibration. So putting the wine in the dishwasher wouldn't work. And the tip is that professional storage is worth every penny. Places like Octavian Vaults or London City Storage can be absolutely worth it because they will take care of the storage for you. And you also don't have to forget about insurance because the wine can break, it can be stolen, it could be flood. If you buy real expensive wine, it should always be insured. And a positive side with wine is that in a lot of countries, wine is seen as something that we drink up, as something expendable. So it's not capital gain tax on it. But you should always check your local home country's rules on it. Now, to make some last words on investing in wine. Compared to the stock market, wine actually outperforms S&P 500. It's one of the very few assets to do that. And it's also a hedge against inflation. During 2008 financial crisis, wine didn't drop in value. And the reason for all this is that wine investors are not like traders. They don't just panic sell. They buy something and keep it. You have to remember that the number of bottles each year are finite, and a lot of them is drinking up. For each year, there's less and less bottles of that type and that year. So how you actually win in wine investing is just by waiting. You have to be patient. You have to outweigh everyone else. So it's not like stock where in 1 month it could just bump up 20%. It will increase in value steadily and patiently. Especially after 5 years, it will start to stabilize. Now, thank you so much for watching this part 1 of wine investing. Please don't forget to subscribe to support our channel, click the like button and give a comment if you want to see more videos about investing in wine. Thank you.